What is Thalia's business focus?
Thalia was formed in 2003. It is an alternative asset manager. We're fully owned by Generali Insurance. Basically, Generali owns 49% of us, and 51% is owned by BSI. BSI is the largest private bank in the southern part of Switzerland, which is itself fully owned by Generali. We spun off of BSI to focus on hedge fund investing, principally for the Generali Group.
We're in a challenging economic environment. How has that changed the vision and the direction of the company?
2008 was a very challenging period for just about anybody in the financial industry, especially hedge funds, and fund of funds took the brunt of the issues at the end of 2008. We pride ourselves in not having been invested in Madoff. We pride ourselves in not having had to treat our clients any differently than what we had promised originally. We promised a certain liquidity to them, and we paid all of our clients back in full. Our vision hasn't changed. We still invest with talented investment managers. We find them usually in the hedge fund industry. What has changed is some of the solutions that we can provide to clients. It's not just off-the-shelf fund of funds. We do provide single strategy fund of funds, we always have, but we also offer bespoke portfolios for those medium-sized clients that want their own portfolio. 2008 taught us about liquidity, and that liquidity needs can be very different, and being in a commingled fund isn't always the best solution for everyone. If you are a medium-sized institution, to be able to have your own fund of funds, but not be able to do the operational due diligence, etc., we want to be able to offer that solution to these kind of clients.
The basic of our work hasn't changed. The research process hasn't changed. The passion hasn't changed. We still love to do what we do. We still are very excited to meet managers. We're still very excited to challenge each other. What is changing is the final shape of the product that the client is asking for, but the fundamental is still remaining very solid, the search for talent, that's it.
So let's look in more detail at your investment process. How does it work?
Well, investing in hedge funds can be very complex because there are many different strategies, there are many funds out there, but the whole process starts with obviously sourcing hedge fund managers. We have a team of 12 analysts that take care of, and myself, including myself, that take care of finding managers, meeting managers, and starting to identify which ones would be interesting subjects to us. You have to understand the investment process, the way the managers think, what their edge is, and we go through this process. It can take 3 to 6 months. The investment team, especially which Matteo is part of, does a lot of work on the investment side. From that, we go on to the rest of the investment process, which includes operational due diligence, which has become much more important post-2008. It was always important to us, but even more so after 2008. We have 2 people dedicated to that part of the business, looking at the way hedge funds are organized, who signs off on cash, what their service level agreements are with prime brokers, with custodians, etc. It's a very important piece of analyzing a hedge fund. And finally, the risk management team is involved to have a look at the hedge fund at 2 levels. First, on a single fund level basis, understanding the risk management of the fund, the approach to how they look at risk and how they manage risk, and then at our level to see if that fund fits into our portfolio and what kind of value it adds to the portfolio.
If I can add this, I think the qualitative side of our investment process is the most important factor, because we really focus on the quality of the managers before looking at the numbers and the performance that they are proposing to us. I think it's most important to look forward than to look backwards and just looking at past performances.
So all of this comes together basically in the investment committee, where each member of the investment committee, which is basically the entire investment team, has something, they have their say, they can have a say. And each element has to have approved an investment before it can go forward. So the qualitative side, the operational side, and the risk side, they have to be agreed that it's a good investment. Finally, once a fund has been approved for investment and it ends up in one of our portfolios, there's still a lot of work in our process, and that is monitoring hedge funds over time and how they perform and that they do what they say they do.
So your Arbitrage Opportunities Fund is of particular interest. What are the details there?
The aim of the fund is to be somehow in control of the underlying mix of strategies. We do that by blending together multi-arbitrage, well-established hedge fund firms together with single manager dedicated to particular strategies. In that way, and using the transparency that those managers provide to us, we are able to be in total control, if you want, of the underlying look-through strategy mix of the portfolio. So we know where we are going with this portfolio, and somehow we can also trim the strategy mix going forward.
Maggie Rokkum-Testi and Matteo Zannier, thank you very much.
Thank you.
Thank you.